There is some positive news, at least on the horizon, as far as India's stock markets are concerned. And that is coming by way of global brokerage Morgan Stanley, which has turned more bullish on India's equity markets for next year, at least, revising its Sensex target to as much as 89,000 by June 2026. Now, this is an 8% increase from current levels. Now, in a bull case scenario, Morgan Stanley says that the Sensex could potentially even touch as much as 1,100,000 within the next 12 months. Well, so all those expectations that people had last year of Sensex touching 1 lakh could perhaps potentially eventually come true in about 12 months or so from now, when, according to Morgan Stanley, if everything goes well, then Sensex would touch that 1 lakh magic figure in the next 12 months. Now, the firm assigns a 30% probability for this event, and this is mostly driven by favorable domestic reforms and supportive global conditions. Now, Morgan Stanley also expects Sensex earnings to compound at nearly 17% annually through FY 2028, with robust domestic growth, stable oil prices, no U.S. recession, and easing interest rates forming the core of its assumptions. It further noted that retail participation remains a key structural support. Now, in a bull case, the upside to 1 lakh could be driven by oil prices staying below $65 a barrel. In addition to that, GST rate cuts, reforms in agriculture, and earnings growth touching a CAGR of 19%. So these are the multiple points to note in those expectations of Sensex touching the 1 lakh mark in the next 12 months in a bull case scenario. Well, Kranthi Bathini, equity strategist at WealthMills Security, joins me this morning. Kranthi, good morning. Pleasure having you back with us on News9. Well, let's start first with what's happening on Dalal Street today. It's a sea of red on the Nifty 50. In fact, all stocks, all indices, all sectors seem to be bleeding this morning. A direct impact of what we saw in US, then knocking on with its effect on Asian markets and India as well. That seems to be my understanding, Kranthi.
Absolutely, Kartik. Indian markets, after climbing all the wall of worries, the geopolitical escalations and also the trade wars, we could able to form a better base for the market. In fact, market was about 25,000 levels of Nifty. We're forming a base. The foreign portfolio investors in the last 20 trading sessions, they infused around more than 50,000 crores into Indian markets. So we had a strong rally, and what we are witnessing is some kind of a rub-off effect at this point of time, some kind of profit booking. And also the global cues have been weighing on the market, creating some pressure on the market in the medium to short term. But what I sense and what I believe at this point of time is definitely Indian market is a buy and dips market. The earnings season, the Q4 earnings season, we had a very good, decent earnings season. We have witnessed earnings expansion in majority of the companies, and also there were completely no negative surprises. That makes the markets to be definitely a buy and dips kind of a market. This is a short-term phenomena, but the global cues are completely important going ahead. By and large, any dip on Indian markets is a warranted buy.
Right, a warranted buy, and this is a major dip that we are seeing this morning. The index is down now, almost touching the 0.9%, and this is just the first, about 15 minutes of trading. We could see more dips coming in trade this morning and perhaps in later parts of the day as well, before potentially some consolidation. But Kranthi, I want you to put in perspective for our viewers what really seems to be the fear in the US. A tax cut is usually seen as good news, but it seems that the fear could be emanating from the fact that tax cuts could increase US's overall deficit and current account deficit, and hence more external borrowing could also derail the fiscal deficit in the US. And is that something which, coupled with what Moody's is saying, that the debt could balloon to $37 trillion, spooking investors away from the US markets?
Absolutely, Kartik. US economy caught in between ice and the fire. That's where the ripple effects are happening, taking place in the market. And also look at the policy measures they are taking. One hand, they've taken very aggressive measures, imposing the tariffs across the broad spectrum of 194 countries. They never left any island also. And that created a immense pressure on the market at the initial stage. They given some kind of a relaxation, and they deferred the decision. Now they are unilaterally they taken that tariff decisions. Now they got into the bilateral negotiations with everyone, and market is on a recovery path. But any tax cut, the immediate impact on the market is first on the deficit. But the consumption and all, it will slowly move up. Markets are always a forward-looking animals, and in the short term to medium term, immediately it looks like a overhang on the market. That's what causing the concerns for the market in the medium to short term. Always market looks what's going to happen immediately. That's where the overhang is getting created. As President Trump always says, this time I'm not worried about the short-term implications on the market. I'm trying to fix the long-term repairs, long-term fault lines of the economy. That's what he's trying to address, but he's not fully addressing that also. So he's bending in between. That's what taking place, the stagflation, and also the key concerns, ballooning debt of U.S. economy.
So, Kranthi, I want to draw your attention to IT stocks. Every time you join us, IT sector seems to be in some sort of a stress. We discussed it last time around also when you were here. But it seems that the IT sector is really under tremendous pressure right now. We haven't really seen the recovery, even though we've seen the recovery of the Sensex and the Nifty at a broad level. IT sector has particularly been really jittery ever since Donald Trump has taken oath and come to the Oval Office. And this morning, again, a direct impact of what we saw on NASDAQ now playing out on the IT sector. Look at HCL Tech, look at Tech Mahindra. They're both down more than 2% in early trade today. TCS and Infosys also down about 1.3, 1.4% or so. So what should one do with IT stocks? Because IT was pretty much the bellwether for the Indian stock markets, and it was this sort of, Teflon coated sector that is always going to work for India's advantage, and that doesn't seem to be the case anymore.
Kartik, on a longer term perspective, these IT stocks have been weathered all the implications. They have witnessed the Y2Ks and 2008, the great financial crisis, and they witnessed the COVID. And so they went through different phases of the economy, different cycles of the economy. And now this is one more cycle the IT is trying to weather. If the investors are a long-term investors, given the kind of strong business models these companies derive, any dip on IT is a good buy for the longer term investors. Definitely in the medium to short term, the US recession worries, and also the economy, how the corporate budgets of US they're going to shape up in the next coming quarters, that plays an important role. And also the US, the corporates, they are in a wait and watch mode right now. They're not expanding their capacities. They are in a wait and watch mode, and also a lot of uncertainty is there in the U.S. corporates. That's creating the overhang on the IT at this point of time. And we also seeing some kind of softening of the dollar. That's also creating some kind of extra pressure on the IT companies in the medium to short term. Until unless the investors are really a long-term investors, if they have a time frame more than 1 year, and if the U.S. economy, whatever be the President Trump is telling, the MAGA, so that's really happening, then IT stocks are going to firm up well. Otherwise, they're going to face this heat in the medium to short term.
All right. And as you're speaking, Kranthi, markets have now dipped. They are down more than 1% already in just about, 20 minutes or so of trading. Sensex and Nifty are both down more than 1% in trade already. And now the 81,000 levels, although Sensex also not holding, Nifty 50 there, now coming down to about 24,560 odd levels. But contrary to what we are seeing on the screen, Kranthi, there is a report from Morgan Stanley which states that perhaps if everything goes well, India's Sensex could perhaps touch 89,000 levels in June next year, June 2026. And if things go even better than expected, then we could be staring at Sensex touching 1 lakh in the next 12 months or so. And now, of course, there are lots of terms and conditions for this 1 lakh vision to happen. We'll go through them also one by one. But broadly, I mean, there were reports and there were indications that even December 2024 could have seen Sensex touching 1 lakh, and then we saw what really happened after September and the sort of misery which investors are dealing with up until even May of 2025. But Sensex at 1 lakh, too optimistic in your opinion?
Yeah, Kartik, it can be, as you mentioned, the report comes up with a lot of ifs and buts and the conditions that is embedded in the report. By and large, Kartik, India is one of the safe haven, and we are at a sweet spot in the entire equity space is concerned. That gives the optimism for the writer of the report, Rhythm, to envisage the Indian markets at 1 lakh, Sensex at 1 lakh. Definitely, it may happen, but definitely what I can watch for this report is it is Indian markets by and large are going to be a stock pickers market. Okay, everyone who are in the market, their stock picking skills are going to be tested in the Indian market. I'll just take a minute to how the changing narrative that's taking place. Kartik, I'll just envisage.
Sure.
Till the time the US president assumed the Oval Office, everybody thought Indian US market is going to witness a dream rally, and that's what witnessed. And we have witnessed an exodus of foreign portfolio funds going back to the US market across the globe. And there was a narrative, sell India, buy China because the valuations looks
Of
very
course.
attractive and relatively compared. Now the narrative is completely changed.
Tables have
India
turned completely.
yeah. So the narrative is completely changing, Kartik. So in these kind of changing narratives, fast-paced narratives, anything can happen in the world.
Absolutely. Anything can happen in the world, and narratives, it's a battle of narratives more than a battle of facts. Well, we'll leave it at that. Kranthi, thank you so much for taking the time and being here with us on News9 this morning.
Thank you, Kartik. Always my pleasure.